My topic is hourly pricing in detail explain, and let's go to the topic and let's go to the start. Hourly pricing refers to a pricing model in which the cost of a product or service is determined based on the amount of time it takes to deliver or consume it. This pricing model is commonly used in service-based industries where the cost of labor is a significant factor in determining the final price. A freelance writer may charge an hourly rate for their services, or a lawyer may bill their clients based on the number of hours worked on a case. Hourly pricing can also be used in retail environments, such as charging customers for the amount of time they spend using equipment or facilities, such as a gym or a car rental service. Hourly pricing can have its advantages, such as providing transparency and predictability for both the service provider and the client. However, it can also be challenging to implement accurately, as it requires accurate tracking of time and can lead to disputes over billing. Additionally, it may not always be the best pricing model for certain businesses or industries. Hourly pricing is a common method of charging for freelance services where the freelancer sets an hourly rate for their work and bills clients for the time they spend working on the project. This means that the client pays for the actual time spent on the project, rather than a fixed price for the entire project. Hourly pricing can be a good option for freelancers, especially for those who are just starting out. It allows them to set a price for their time and skills, and ensures they are paid for the actual hours worked. It can also help to provide transparency to the client about the work that is being done and the time it takes to complete tasks. You can determine your ideal hourly pricing using our free rate calculator. However, there are also some potential downsides to hourly pricing. For example, it can be difficult to accurately estimate the amount of time it will take to complete a project, which can lead to disagreements with clients over billing. Additionally, it may not be the best option for all types of projects or clients. Some clients may prefer a fixed price for a project, or may want to negotiate a flat fee for ongoing work. A pricing strategy is a model or method used to establish the best price for a product or service. It helps you choose prices to maximize profits and shareholder value while considering consumer and market demand. Hourly pricing refers to a pricing model where a service provider charges their clients a set rate for every hour of work they perform. This is a common pricing model used in various industries, including freelancing, consulting, and other service-based businesses. Hourly pricing allows service providers to accurately charge clients for the exact amount of work they perform, and it also provides clients with a clear understanding of how much they will be charged for services rendered. It can be especially useful in situations where the scope of work is not well defined, and the provider cannot accurately estimate how long a project will take. However, hourly pricing may not always be the best pricing model for every situation. For example, if a project has a clearly defined scope and timeline, it may be more appropriate to charge a fixed fee for the entire project. Additionally, some clients may prefer other pricing models, such as value-based pricing or performance-based pricing. Pricing strategies account for many of your business factors, like revenue goals, marketing objectives, target audience, brand positioning, and product attributes. They're also influenced by external factors like consumer demand, competitor pricing, and overall market and economic trends. It's not uncommon for entrepreneurs and business owners to skim over pricing. They often look at the cost of their products, COGS, consider their competitors' rates, and tweak their own selling price by a few dollars. While your COGS and competitors are important, they shouldn't be at the center of your pricing strategy. Pricing modeling refers to the methods you can use to determine the right price for your products. Price models take into consideration factors such as cost of producing an item, the customer's perception of its value and type of product, for example, retail goods compared to services. They are often visually represented on a chart such as a demand curve. The best pricing model will be the one that maximizes revenue for your particular business, and the strategy you use might vary between products and over time. Hourly pricing refers to a pricing model in which a service provider charges its clients based on the number of hours worked. This is a common pricing strategy for professionals such as lawyers, consultants, freelancers, and other service-based businesses that bill by the hour. Hourly pricing can be advantageous for service providers because it allows them to charge for the time and effort they put into a project or task. It can also provide flexibility for clients who may only need services on an as-needed basis or for a short period of time. However, hourly pricing can also be disadvantageous for clients if they feel like they are being charged for time that is not directly related to the work being done. Additionally, hourly pricing can be difficult to estimate accurately, which can lead to surprises for both the service provider and the client. Overall, hourly pricing can be an effective pricing strategy for service-based businesses, but it's important to carefully consider the pros and cons before implementing it. Cost-plus pricing model. Cost-plus pricing can be a relatively straightforward yet powerful strategy for setting your prices. To use cost-plus pricing, you calculate the total cost of materials, labor overhead that go into making a product and then adding a markup so you earn a profit. In order to use this model, you'll want to identify those costs that contribute to producing your product and perform a careful analysis of market factors to determine the appropriate markup percentage. Consider evaluating the standard markup in your industry as well as location and demand when deciding when and how to use this strategy. Hourly pricing refers to a pricing model in which a service provider charges its clients based on the number of hours worked. This is a common pricing strategy for professionals such as lawyers, consultants, freelancers, and other service-based businesses that bill by the hour. Hourly pricing can be advantageous for service providers because it allows them to charge for the time and effort they put into a project or task. It can also provide flexibility for clients who may only need services on an as-needed basis or for a short period of time. However, hourly pricing can also be disadvantageous for clients if they feel like they are being charged for time that is not directly related to the work being done. Additionally, hourly pricing can be difficult to estimate accurately, which can lead to surprises for both the service provider and the client. Overall, hourly pricing can be an effective pricing strategy for service-based businesses, but it's important to carefully consider the pros and cons before implementing it. Hourly pricing refers to a billing method used by many businesses to charge for their services or products based on the number of hours worked. This pricing model is commonly used by professionals such as lawyers, accountants, consultants, and freelancers who bill their clients based on the amount of time spent on a particular project or task. In hourly pricing, the client is typically billed for the time spent by the service provider on a specific project or task. The hourly rate may vary depending on the experience and expertise of the service provider, the complexity of the project, and the market demand for their services. Hourly pricing is often preferred by service providers as it allows them to accurately track the time spent on each project and ensure that they are compensated fairly for their work. On the other hand, clients may prefer fixed pricing, as it provides them with a clear idea of the cost upfront and avoids any surprises or unexpected fees. Hourly pricing model. Hourly pricing is used primarily to price services rather than goods or physical products. This pricing model often takes factors such as the value of the provider's labor and any associated expenses into account. Hourly pricing can require more documentation than other kinds of pricing, especially on the part of the service provider, because customers often like to know exactly what tasks were accomplished in the period of time they paid for. For example, an hourly freelance designer might need to specifically document the tasks they accomplished in a period of time according to type so the client can see the use of that billable time. Hourly pricing refers to a billing model where a service provider charges their clients based on the number of hours worked on a particular project or service. This pricing model is commonly used by freelancers, consultants, and other service providers who offer their services on an hourly basis. Hourly pricing can be advantageous for both the service provider and the client. For the service provider, it ensures that they are compensated for the time and effort they put into the project, and it allows them to adjust their rates based on the complexity and urgency of the work. For the client, it provides a level of transparency as they are only paying for the actual time worked, and it allows them to control the cost of the project by setting limits on the number of hours worked. Hourly pricing can vary widely depending on the nature of the service being provided, the experience and expertise of the service provider, and the market demand for their services. It's important for both the service provider and the client to agree on the hourly rate and any other terms before beginning work to ensure a smooth and satisfactory working relationship. Refers to a pricing model where a service or product is charged on an hourly basis. This is common in various industries such as consulting, freelancing, and service-based businesses. Hourly pricing allows service providers to charge for their time and expertise, which can vary based on the complexity and nature of the work involved. It also provides flexibility for clients who may need services on an as-needed basis. Hourly pricing can be beneficial for both the service provider and the client. For the service provider, it ensures that they are compensated for the time they spend working on a project, while for the client, it allows them to pay only for the time and services they require. However, hourly pricing can also have some downsides, such as the potential for scope creep, where the project expands beyond the original scope, resulting in higher costs for the client. Additionally, hourly pricing may not always be the most transparent pricing model, as clients may not know exactly how many hours a project will take to complete. Hourly pricing refers to a pricing model where the cost of a product or service is based on the amount of time spent delivering it. This is often used in service-based industries, such as consulting or freelancing, where the provider charges a set hourly rate for their time and expertise. Hourly pricing can be beneficial for both the provider and the client. For the provider, it ensures they are compensated for the actual time they spend working on a project, rather than a fixed fee that may not accurately reflect the effort required. For the client, hourly pricing can be more transparent and flexible, as they only pay for the time they actually use and can adjust the scope of work accordingly. Hourly pricing is also commonly used in industries such as manufacturing or construction, where labor costs are a significant component of the overall project cost. In these cases, hourly pricing is typically used to calculate the labor cost of a project, while other expenses such as materials or equipment may be billed separately. Overall, hourly pricing is a flexible and transparent pricing model that can be beneficial for both providers and clients in many different industries. Hourly pricing model. Hourly pricing is used primarily to price services rather than goods or physical products. This pricing model often takes factors such as the value of the provider's labor and any associated expenses into account. Hourly pricing can require more documentation than other kinds of pricing, especially on the part of the service provider, because customers often like to know exactly what tasks were accomplished in the period of time they paid for. For example, an hourly freelance designer might need to specifically document the tasks they accomplished in a period of time according to type so the client can see the use of that billable time. Hourly pricing is a billing model in which a service provider charges their clients a fixed fee for every hour of work they perform. This is a common pricing model used by many professionals, such as lawyers, consultants, freelancers, and other service providers who charge for their time and expertise. Hourly pricing can be beneficial for both the service provider and the client, as it allows for greater flexibility and transparency in billing. For the service provider, hourly pricing ensures that they are compensated for the time and effort they put into a project or task. For the client, hourly pricing allows them to pay only for the amount of time the service provider spends on their project, rather than a flat fee that may not accurately reflect the amount of work required. However, it is important to note that hourly pricing may not always be the most cost-effective option for clients, particularly if the service provider takes longer than expected to complete a project. As such, clients should carefully consider the estimated time and cost of a project before agreeing to hourly pricing, and may wish to negotiate a cap on the total amount they will be charged. Hourly pricing refers to a billing method where services are charged based on the number of hours worked. This pricing model is commonly used in industries such as consulting, legal services, and freelance work. The hourly rate typically varies depending on the type of service being offered and the level of experience of the person providing the service. Hourly pricing can be beneficial for both service providers and clients, as it allows for greater flexibility in terms of the amount of work completed and the overall cost. Clients can control their expenses by only paying for the time actually spent on a project, while service providers can adjust their pricing based on their workload and level of expertise. However, hourly pricing can also be unpredictable and may not always accurately reflect the value of the service being provided. Fixed pricing model. Fixed pricing, also known as project-based pricing, involves setting a price for an entire contract or project. This method offers consistency for the customer and might maximize profits if the business can complete the project efficiently. A wedding photographer, for example, might use fixed pricing when they charge a set price for a photo package. Although the cost of their transportation to the site, hours and equipment might change, the cost of that service remains the same. For this reason, it is important to analyze the total cost of a product or service and adjust the fixed price accordingly. Hourly pricing refers to a pricing model where a product or service is charged based on the amount of time it is used or consumed. This pricing model is commonly used in service-based industries, such as consulting, legal, accounting, and IT services, where the amount of time spent on a project or task is a key factor in determining the cost. Hourly pricing can be a straightforward and transparent way of billing for services, as it allows clients to know exactly how much they are being charged for each hour of work. However, it can also lead to uncertainty and unexpected costs if the amount of time required for a project or task is not accurately estimated. Hourly pricing can also be compared with other pricing models, such as flat-rate pricing or value-based pricing, to determine which pricing strategy is best suited for a particular product or service. Equity pricing model. In some cases, you may be willing to accept equity, or stock in a company, as compensation for your product or services. Choosing to offer equity pricing can depend on factors such as the size and success of a client company as well as the anticipated performance of their stock. You might also choose to use a combination of a different pricing model and equity pricing if your situation requires cash income and long-term value. Hourly pricing refers to a pricing model where a product or service is charged based on the amount of time it takes to provide or use it. Hourly pricing is commonly used in service-based industries such as consulting, legal services, and freelance work. The hourly rate charged by a provider typically varies based on factors such as their experience, qualifications, location, and the complexity of the work required. Hourly pricing can be advantageous for both the provider and the client, as it allows for greater flexibility in terms of the amount of work that can be done and the cost incurred. Hourly pricing is also commonly used in industries such as transportation, where services such as taxis or ride-sharing are charged based on the amount of time the service is used. In this case, the hourly rate may be supplemented by additional charges such as distance traveled or tolls. Performance-based pricing model. Performance-based pricing relies on the quality of a specific service provided to determine the price. This model works best when you can document the outcomes of your work and agree on payment for those outcomes ahead of time. For example, if you design an app that is meant to increase customer engagement, you may discuss the specific metrics that will result in a specific price point. This model is often complex and can support working relationships that incentivize performance. Because of the often subjective nature of project performance, you may wish to strongly consider using this model only if your business or organization has strong legal support to review contracts ahead of time. Hourly pricing refers to a pricing strategy where a product or service is priced based on the number of hours it takes to complete or use. This type of pricing is commonly used in industries such as consulting, freelancing, and other service-based businesses. Hourly pricing can be beneficial for both the service provider and the customer. For the provider, it allows for a clear understanding of the value of their time and expertise, and provides a consistent revenue stream. For the customer, it provides transparency in pricing and the ability to pay only for the specific services or time they need. However, there are also some potential drawbacks to hourly pricing. It can be difficult to accurately estimate the time it will take to complete a project or service, leading to unexpected costs for the customer. Additionally, hourly pricing can incentivize the service provider to work slowly, as they are being paid based on the amount of time spent rather than the quality of the work. Overall, whether hourly pricing is the best pricing strategy depends on the specific circumstances of the business and the needs of the customer. It is important to carefully consider all pricing options and choose the one that best meets the needs of both the business and the customer. Retainer pricing model. Retainer pricing involves determining prices for service and agreeing upon them with the customer before work is completed. Retainer prices can be set using the value of the service provided, amount for a certain number of customer engagements each month, or using time, such as a contract that includes 80 billable hours of consultation work each calendar month. Some retainer pricing agreements allow the customer to keep any leftover hours or billable units and use them during the next time period. Others state that any unused services will be lost at the end of the contract period. Carefully consider whether you want to keep any additional units available before setting your pricing terms. Hourly pricing is a pricing model in which goods or services are priced based on the amount of time it takes to produce or deliver them. This is a common pricing strategy used by businesses and service providers, such as lawyers, consultants, and freelancers. In hourly pricing, the price of the good or service is calculated by multiplying the hourly rate by the number of hours it takes to complete the work. This model provides a level of transparency to the customer, as they only pay for the actual time spent on the work. Hourly pricing can also provide flexibility for both the customer and the provider. For the customer, they can choose to only pay for the services they need, and for the provider, they can adjust their pricing based on the complexity or length of the project. However, hourly pricing may not always be the best pricing model for every business or situation. It may not be suitable for projects that are difficult to estimate in terms of time required, or for situations where the customer values the outcome of the project more than the time spent on it. In these cases, alternative pricing models such as fixed pricing or value-based pricing may be more appropriate. Hourly pricing is a pricing strategy in which the cost of a product or service is determined by the amount of time it takes to provide that product or service. This pricing model is commonly used in industries such as consulting, legal services, and freelance work, where the amount of time spent on a project or task is a significant factor in determining the final cost. Hourly pricing can be beneficial for both the service provider and the customer. For the service provider, it allows them to accurately track the amount of time spent on a project and ensure that they are appropriately compensated for their time. For the customer, hourly pricing provides transparency in the cost of a project, allowing them to better budget and understand the value they are receiving. It's important to note that hourly pricing may not always be the most appropriate pricing model for every situation. In some cases, a flat fee or value-based pricing may be more suitable, depending on the nature of the product or service being provided. Hourly rate is the price that you charge per hour for a project. To bill clients by the hour, you need to track the hours you spent working for the client and bill at the end of the project or an agreed-upon cycle. Charging clients an hourly fee is effective for long-term projects which are prone to changes. It works best when you work for the client in-house. If you're working remotely, hourly billing can be challenging. However, it makes it easier for you to account for changes in the project. Put your focus on your work, not the clock. With FreshBooks Time Tracker, all you need to do is set a timer and then get the job started. Our tracker lets you see how much time you're spending on various clients and projects, and when it's all said and done, you can create an invoice with the click of a button. Try the time tracker on your desktop or mobile, and rest easy knowing FreshBooks has you covered. Click here to try FreshBooks for free. Hourly pricing is a pricing model in which the cost of a product or service is based on the number of hours it takes to deliver or use the product or service. This model is commonly used in industries such as consulting, freelancing, and other service-based businesses where the time spent on a project or task is the primary factor in determining the cost. For example, a freelance graphic designer may charge an hourly rate for their work on a project, with the total cost of the project being calculated by multiplying the hourly rate by the number of hours spent on the project. Hourly pricing can be beneficial for both the service provider and the customer, as it provides a clear understanding of the cost and allows for greater flexibility in terms of project scope and timelines. However, it may not be suitable for all types of products or services and may not always accurately reflect the value provided by the service or product. Hourly pricing is a pricing model in which a product or service is priced based on the amount of time it takes to complete or consume it. In this model, the customer pays a fixed rate per hour of use or service. Hourly pricing is commonly used in industries such as consulting, freelancing, and professional services where the amount of time spent on a project is the primary factor in determining the price. It can also be used in industries such as rental services, where customers are charged based on the amount of time they use a product. Hourly pricing can be advantageous for both the customer and the provider, as it allows for greater flexibility and customization of services. Customers only pay for the time they use, and providers can adjust pricing based on the complexity and duration of the project. However, hourly pricing can also be challenging to implement as it requires accurate time tracking and billing systems. It may also be difficult to estimate the total cost of a project upfront, which can be a concern for customers. Hourly pricing refers to a method of pricing goods or services based on the amount of time expended in providing the service or producing the good. For example, if a lawyer charges $300 per hour for their services, the fee for a 2-hour consultation would be $600. Similarly, a carpenter may charge $50 per hour for their services, with the final cost of a project dependent on the amount of time required to complete it. Hourly pricing is a common method of pricing for professionals, freelancers, and service-based businesses. It is also used in some retail environments, such as car repair shops, which may charge hourly labor rates for repairs. Hourly pricing refers to a pricing strategy in which a service or product is charged based on the amount of time it is used or consumed. This type of pricing is commonly used in industries such as consulting, freelancing, and other professional services where the amount of time spent on a project or task is the primary factor that determines the cost. Hourly pricing can be advantageous for both the service provider and the customer. For the service provider, it ensures that they are compensated for the actual time they spend working on a project or task, and it allows them to adjust their pricing based on the complexity of the project or the skills required to complete it. For the customer, hourly pricing can provide greater transparency and control over costs, as they only pay for the time that is actually spent on the project or task. Hourly pricing can vary widely depending on the industry and the type of service being provided. It is important for both the service provider and the customer to establish clear expectations and guidelines for the project or task before agreeing to an hourly rate to avoid any misunderstandings or disputes down the line. Hourly pricing is beneficial for businesses and professionals who value the returns on their time. Additionally, it allows clients to have an accurate understanding of the cost of the service they are receiving. However, hourly pricing can be limiting for businesses that want to expand and scale their services, as they cannot charge incrementally larger fees without increasing their hourly rate. Another disadvantage of hourly pricing is it can lead to inefficiencies or a decrease in the quality of work if the professional is incentivized to prolong the time spent on a project to increase their billable hours. This can cause conflict between the professional and their client and may ultimately damage the professional's reputation. In some cases, it may be better for a business to use a value-based pricing model, in which the price is based on the perceived value of the product or service rather than the amount of time it takes to deliver it. This approach can allow for more flexibility and higher profits for the business. Hourly pricing refers to a pricing model in which a service or product is priced based on the amount of time it takes to complete or consume. This model is commonly used by service providers such as lawyers, consultants, and freelancers. For example, a lawyer may charge an hourly rate for their time spent working on a client's case. Similarly, a consultant may charge an hourly rate for their time spent advising a client on a specific project. Hourly pricing can be beneficial for both the service provider and the client, as it allows for flexibility in the amount of time spent on a project or service. However, it is important to establish clear expectations and boundaries around the hourly rate and the scope of the work to be completed in order to avoid misunderstandings or conflicts. Value-based pricing can also lead to a more collaborative relationship between the business and the client, as the focus is on delivering specific outcomes rather than simply completing tasks. Additionally, it encourages the business to prioritize efficiency and quality in delivering their services, as they are not incentivized to drag out projects to increase their earnings. However, value-based pricing requires a deep understanding of the client's needs and expectations, as well as the ability to effectively communicate the value of the service being provided. This can be challenging for businesses that are less experienced or have not developed a strong. Ultimately, the choice between hourly and value-based pricing depends on the specific business and the services they offer. It is important to carefully consider the pros and cons of each pricing model and choose the approach that best aligns with the company's goals and values. Hourly pricing refers to a pricing model in which the cost of a product or service is based on the amount of time spent providing it. This pricing model is commonly used in industries such as consulting, legal services, accounting, and freelancing. The hourly rate is typically agreed upon in advance between the provider and the customer, and can vary depending on factors such as the level of expertise required, the complexity of the work, and the geographic location of the provider. Hourly pricing can offer both the provider and the customer flexibility, as the customer only pays for the time that the provider spends working on the project, and the provider can adjust their workload and availability accordingly. However, it can also be challenging for the provider to accurately estimate the amount of time a project will take, and for the customer to predict the final cost. As such, some providers and customers may prefer to use alternative pricing models, such as project-based pricing or retainer-based pricing. Furthermore, it is important to regularly evaluate the chosen pricing strategy to ensure that it continues to serve the business's needs and remains competitive in the market. A flexible pricing strategy that can be adjusted as the company grows and evolves can help to maintain a competitive edge and ensure long-term success. Hourly pricing refers to the practice of setting a price for a service or product based on the amount of time it takes to complete or consume it. For example, a consultant may charge a certain hourly rate for their time spent working on a project for a client. Hourly pricing can be a flexible and effective way to charge for services, as it allows for adjustments to be made based on the actual amount of time spent on a project. Hourly pricing can also be used in other industries, such as rental services. For example, a car rental company may charge an hourly rate for customers who only need a vehicle for a short period of time. However, hourly pricing may not always be the best approach. For some projects, it may be difficult to accurately estimate the time required to complete the work, and hourly pricing can lead to disagreements over how much time was actually spent. In these cases, a flat fee or project-based pricing may be a better option. Regular evaluations should include analyzing factors such as customer behavior, market trends, competitor pricing, and overall financial performance. If necessary, changes to the pricing strategy should be made to better align with the company's goals and objectives. It is also important to communicate any changes to pricing with customers in a transparent and clear manner. This can help to maintain the trust and loyalty of existing customers and attract new ones. In conclusion, choosing the right pricing strategy is crucial for the success of any business. It requires careful consideration of various factors and should be regularly evaluated and adjusted as needed. A flexible pricing strategy can help to ensure long-term success and maintain a competitive advantage in the market. Hourly pricing refers to a pricing strategy where the price of a product or service is determined by the amount of time it takes to provide the service or manufacture the product. Hourly pricing is commonly used in industries such as consulting, legal services, and freelancing. It is a popular pricing model because it provides transparency to customers, who can see exactly what they are paying for based on the time spent on the project. Hourly pricing can be advantageous for service providers because it ensures that they are compensated for the time they spend working on a project. However, it can also be challenging because it requires accurately tracking the amount of time spent on a project and communicating this to the customer in a clear and transparent way. When using hourly pricing, it's important to consider factors such as the complexity of the project, the experience and expertise of the service provider, and the market rates for similar services in order to determine a fair hourly rate. Additionally, it's important to establish clear expectations with the customer regarding the scope of work, the timeline for completion, and any potential additional costs that may arise. Furthermore, businesses should always aim to provide value to their customers through their products or services. Even if the pricing strategy may fluctuate, the quality and value of what a business offers should remain consistent. Moreover, maintaining a strong relationship with customers and understanding their needs and preferences can help businesses to better tailor their pricing strategy. It is also important to keep an eye on market trends and competitors' pricing strategies to ensure that the business remains competitive. Ultimately, a successful pricing strategy should strike a balance between profitability, customer satisfaction, and maintaining a competitive edge in the market. By regularly evaluating and adjusting pricing strategies, businesses can position themselves for long. Thank you for watching the video and subscribe the channel.